Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. So, yesterday, being the Bank Nifty expiry, we could see that huge volatility in the market, and market being market can never be predicted. But same thing was kind of a good thing for option seller. So, we could see the markets kind of falling in the first half, and then a huge recovery. In fact, just look at those candles, the way the candles are forming, especially the recovery candle. The way it kind of moved up is something, my God. It's like, covering up the entire fall in a few, maybe 30 minutes, 40 minutes. So that's the only thing that happened. And that big rally till the end of the day, which helped the market close slightly positive again. But then, of course, as we have discussed, 19,900 to 20,000 is going to be a big resistance. So that is something which has to be broken for the Nifty to actually go further up. Will that break in this 2 days is something that we need to watch. Why these 2 days? I'll talk about it. But before that, let me talk about what happened yesterday. Why did the banks fall? So, of course, there was this, RBI governor speaking at one of the conferences, and he said that the reason why they had actually increased the weightage for the loans that were dispersed by banks was nothing but, in fact, we have discussed about this on the Sunday Market Pulse video. If you missed that, do watch that so that you understand this process clearly. So the reason he has quoted is that there's a feeling that banks are looking for credit growth. What do you mean by credit growth? Credit growth is nothing but increasing the loan book. Now, why do they want to increase the loan book? For banks, higher the loans lent, higher the interest earned. So that is what their business is. So every bank would try that, but then RBI wants to caution the banks because having too many loans in the market also could be dangerous. Because first of all, we know Indian people, especially most of the population in India, are not financially literate. So in that case, when people are not great at handling money, then money management is missing. There are high chances that these loans can have a default, and that could put bigger banks into bigger trouble, and that in over and on, entire nation into a trouble. So I don't know if you recall the 2008 recession. Why was it caused? It was majorly because US had similarly given out unchecked loans. So they were looking at credit growth. A lot of loans given, and mainly home loans were given. Most of these homes were deserted, and they were not in a position to pay their EMIs, and slowly uh, it led to a recession. So it is a good thing that RBI is actually controlling it at this point of time. So that is not at all bad. But then, yes, as a bank investor, what would you do? Is probably reduce your holding there. So that's completely okay. This is how your market goes up and down. But a long-term investor would continue to hold because long-term investors looking at a decent 12 to 14 or 15% return, whereas a short-term trader is looking for a short-term big income. So such people will actually exit. The short-term traders will exit, but long-term will continue to hold and probably only add a holding because any nation cannot run without a bank. So that is what happened yesterday, and we could see the Bank Nifty actually falling. But then a great support came in from the IT sector again, and that kind of held up the market at this point of time. And I would say, of course, the markets are kind of like, even if there's a fall in one side, there is a sector supporting, and markets are trying to stabilize at this range, of course, with huge volatility. So that is the situation right now. So, markets are markets, and markets will behave the way they want, and prediction is not the key. But then, of course, we have a view and we take a trade, and that's important. As all of you know, I've already started. I had already booked some good profit last week. So now I am looking at starting to add the funds back into the market, but of course via a decent small case. So I've shortlisted one, and I've already invested into that in a small portion, just checking it out how it's working, and based on that I would be communicating it to the MPA family. So apart from that, of course, yesterday we had the Tata Tech IPO, and it's already oversubscribed by more than 6x. I've applied for that. I am not a big fan of IPO, but yes, I have applied that for that already yesterday because it's a Tata Group company, and Tata being one of my favorite brand. I don't mind being invested. Even if it falls or rises, I don't mind, because I know over a period of time it is going to bring some good return to me. So I'm looking at it from a long-term investor's perspective, and I've invested into it. And I don't know. So IPOs. One of the thing why I don't like IPO is, even if the IPO is for a good company, then definitely there are lower chances of getting an allotment. So I, being a decent investor, I am looking at investing a bigger amount of money. But then, even if I've applied for maybe worth 5 or 10 lakhs, but then finally I may get 1 lakh allotment, or a 10,000 allotment, 15,000 allotment, anything. Now that's not known. So for that period, my fund is kind of blocked. So that is something which is not something I'm happy with. But then we have to live with that, no other option. So that's the reason I've just gone for a decent, small quantity into the IPO. Let's see how it goes. But then I don't recommend anybody to, go full on. It's not a great, not a, kind of breathtaking IPO, nothing like that. It's not a thing. But of course, as data group, the reliability and the faith in the brand, of course, stays. So that is something that we can see. So apart from that, if you look at the markets, yesterday the US markets have closed really positive. Almost 200 points up was Dow, and that was a great sign. Of course, the US markets are closed today for Thanksgiving, and tomorrow Friday they have a half day trading only. So this is the Black Friday week going on. So yes, that reminded me, the Black Friday deal is on at tradingview.com. So if you have not subscribed to a plan, this is the great time. This is the only time of the year they come up with almost 30 to 70% discount on their plans. So if you have not done that, do use the link given in the description of this video, and you will not only get the 70% discount plus additional discount using a referral link from MPI Invest. So yes, that can be done. That's a good option if you want to monitor charts yourself. But again, as an investor, if you are an investor, you really don't have to do it. You can just put into a good small case or an IAP and stay calm and stay invested. So that's about it. So as of now, for today is the Nifty expiry. So naturally markets are going to be kind of volatile, and with the US market positive, Asian markets are trading slightly higher, and Indian market is also expected to open with a gap up. But then gap up is happening at a very important resistance point. So will this resistance be broken and then go further higher? That is something that needs to be watched out, because when the US markets are closed for next 2 days, I would say 2 days, because even Friday half day is not a great thing deal. So it is going to be a long weekend in the US. That is Thursday, Friday, and then Saturday, Sunday, 4 days. The markets are going to open only on Monday. So that way, Indian market may see a positive surge. The FIIs also may not be much active. So that is something which can kind of take the markets up. So that could be one thing that can be watched out. Though it may be temporary, but yes, there are high chances the market can also break out, which may not sustain later. So this is very important to be watched on how the markets are playing. Any clear breakout of 9900 can give a movement up to 20,000, and if 20,000 is broken, that can go higher. But again, on the lower side, 650 is a very important support. So 600 to 650 is a very important support range, and that is coming. And if that is broken downside, then 19,500, of course, the most important support. So these are levels to be watched out for now. And being a long weekend, I would kind of prefer to keep my trades for next week lower side. So that's also something that I'll be monitoring, right? So that's it for now. I think we have covered it all. If you have any questions, you can of course post in the comment section. We can discuss that. And of course, we'll come with more details tomorrow morning in the podcast. So see you tomorrow. This is Srikanth Rajan signing off. Until we catch up tomorrow morning, goodbye. Have a great day and a great expiry.